Dogecoin Doge has been treading a fine line around 21 cents in early September 2025, a price point coinciding with its 200-day exponential moving average EMA and a watershed level for its next move. In this zone, the market's mood has grown increasingly cautious. According to market analytics, derivatives and on-chain data have been flashing warning signals, for example. CoinGlass data show the Doge funding rate recently flipped slightly negative around -0.0010%. Traders betting on price declines are outnumbering longs. Historically, such a shift often precedes downward pressure as short sellers start paying fees to the longs. Meanwhile, on-chain monitoring services like Santiment report that large Dogecoin holders, whales, have been trimming their positions. Wallets holding between 100,000 and 100 million Doge have collectively sold roughly 250 million coins since late August. This mass distribution of tokens by whales adds to a picture of caution, signaling these deep-pocketed investors are reducing exposure. These bearish signals have begun to materialize in the charts. Doge was recently rejected at an ascending support trendline drawn from lows in late June and slid about 3% on the following session, underscoring mounting selling pressure. As of this writing, Doge is stuck at its 200-day EMA near $0.211. Technical indicators on the daily chart also lean to the downside. The relative strength index is around the mid-40s below neutral 50, and the MACD has formed a bearish crossover. In plain terms, momentum has turned slightly negative in the near term. If Dogecoin ultimately closes below $0.211 on a daily basis, analysts warn that the drop could widen. In that case, the next major support to watch would be around 18 cents, a weekly support zone that would come into play under sustained selling. CoinCentral's recent analysis confirms this, noting that a daily close under $0.211 might send Doge toward that $0.181 mark. Indeed, bearish chart patterns have formed. One report points out a rising wedge in DOG's price, which typically resolves with a substantial break lower. In that view, if the wedge's lower trendline around $0.218 fails, Doge could even slump toward 12 cents, a drop of roughly 45% from current levels. This worst-case scenario has been flagged by Cointelegraph, which sees declining futures open interest and falling daily active addresses as further signs of waning demand. In short, on the risk side, the combination of negative funding, rates, heavy whale selling, and bearish chart setups could drive Dogecoin to significantly lower lows if bulls cannot defend the 21 cents $0.22 zone. Yet the story is not one-sided. Some analysts see opportunities lurking if Doge can hold its ground. First, that same 21 cents 22 cents region is viewed by many as a strong floor so far. Traders have noted that Doge repeatedly bounced off roughly 21 cents in the past days. For example, CoinDesk reports that during a volatile session around August 31st, September 1st, Doge dipped to about 21 cents but quickly rebounded to 22 cents on surge in volume. One technical analyst cites a massive intraday turnover of 808.9 million Doge, about triple the daily average during that bounce. This suggests heavy buying interest at the lower bound, supporting the bullish case. Doge is also forming long-term patterns that have often preceded big rallies. Crypto analysts have pointed out that Dogecoin appears to be tracing a triangular consolidation, descending resistance line above it meeting an ascending support line below. Notably, charts from 2016 and 2020 show similar triangle or wedge bases before Doge exploded upward. One crypto trader known on Twitter as @GalaxyBTC highlights that Dogecoin is pushing against a descending resistance line while maintaining support above an ascending trend, a setup that could set the stage for another explosive move higher. If this triangle pattern holds, a decisive breakout above it would break the bearish spell. From a trading perspective, there's a clear threshold that bulls and bears are eyeing. Many strategists are watching the mid-22 cents level as a make-or-break point. CoinDesk's analysis notes that a sustained move above roughly $0.2 to $5 could flip the short-term bias back bullish. Technicians even mention a possible panhandle consolidation with targets near 25 cents 30 cents should Doge clear those resistance zones. On the daily chart, specific hurdles lie at about $0.247 and $0.253, and beyond those around $0.370. Breaking above these would open the path toward much loftier targets. One chart study reminds us that $0.7 to $3 DOGE's 2021 peak could come into view if the rally truly gains steam. Even a more modest bounce would be meaningful. Analysts point out that if Doge merely holds its 200-day EMA support near $0.211 and sustains buying, the coin could retest the immediate resistance near $0.247. This echoes Cohen Central's view that a firm base here might allow Doge to recover toward the daily resistance at $0.247 and keep the bullish pattern intact. Fundamentally, some of the on-chain signals are also mixed, rather than uniformly negative. For instance, CoinGlass data show that while funding has flipped negative recently, the long-to-short ratio also suggests there is still a substantial proportion of long positions in the market, meaning not everyone is bearish. Meanwhile, other studies point out that Dogecoin's open interest and volumes jumped significantly during rallies earlier in the summer, implying that institutional participation is not zero. Rather, it's historically ebbing and flowing. Cointelegraph's summer analysis highlighted a potentially bullish picture by mid-July. Doge had not only broken out of a long-term down channel, but also formed a textbook double-bottom pattern. Such a structure, coupled with rising futures open interest, which surged about 67% in late July, and improving holder sentiment, set the stage for a 300% rally if Doge could reclaim and hold 25 cents. In other words, like increased futures, OI and a net profit zone for long-term holders suggest underlying demand may still build. Even if these conditions haven't yet fully played out in September, the framework remains that Dogecoin has a history of large moves once certain levels give way. On top of pure technicals, there are narrative factors that swing the outlook. On the bullish side, Dogecoin retains a loyal community and media attention, for instance. Ongoing hype around Elon Musk's Doge-themed projects, meaning any positive news or meme coin mania could ignite fresh buying. If broader crypto markets recover, or big altcoins like Bitcoin and Ethereum rally, Doge often benefits from overflow buying. Additionally, while typically brings new quarterly budgets and speculation queue for seasonality is often strong for cryptos. So some bullish strategists see the current late summer lull as a possible setup for a seasonal upswing. Conversely, macro headwinds still loom for risk assets, and Dogecoin is not immune. With global trade tensions, rate uncertainties, and periodic Bitcoin dips still posing risks, Doge might suffer if capital flees crypto generally. Regulatory moves, SEC actions, crypto crackdowns could also spook meme coins quickly, given their volatile nature. Whale behavior remains a wildcard. If large holders who have been selling suddenly decide to unload en masse, the price could gap down fast. In technical analysis, bears emphasize caution. The coins are SI and MACD setup, combined with declining network usage, hint that a bounce is not guaranteed. In fact, analysts using the rising wedge pattern study caution that failing to defend around 21 cents, 22 cents, opens the door to targets well below $0.18. In summary, the Dogecoin market is at a crossroads. The coin's fate in the short term seems to hinge on whether bulls can hold the 21 cents zone. If Doge convincingly breaks and closes above the 200-day EMA in key resistance levels roughly 22 cents $0.2 to $5, it could spark a strong rebound toward the mid-$0, 20 south and beyond. On the other hand, if that support fails, the slide could accelerate, potentially retesting low to mid-$0, 10 south as some analysts fear. Both outcomes are supported by credible indicators. On-chain and futures data suggest a growing bearish tilt. In a deeper correction risk, yet technical chart patterns and volume spikes hint at latent bullish momentum. Investors and traders, aware of these dual possibilities, are watching every candle closely. In this finely balanced situation, vigilance is key. Dogecoin's next directional move will likely validate one narrative or the other, with actual trading volumes and price closes around these pivot levels providing the critical evidence.